LPMI, or lender-paid mortgage insurance, is a type of mortgage insurance that can save some home buyers money. Here's how it works. Instead of you making your monthly mortgage insurance payment, that mortgage insurance cost is absorbed into the interest rate, which means that you pay a little bit higher on your mortgage rate. However, the mortgage insurance is paid by the mortgage company on your behalf. And people do this for different reasons. Sometimes if we do an analysis of monthly payment of somebody paying monthly versus absorbing it into the interest rate, sometimes there is some savings from a monthly payment perspective. But most people usually do this because chances are they can deduct the mortgage interest where they cannot deduct the mortgage insurance premium. There used to be a large mortgage company back in the day that called it tax advantage mortgage insurance when they wanted to give it a different type of brand that people understood a little bit easier. So it's important to understand different types of mortgage insurance, how it benefits you, and then to take some of that information to your CPA to formulate a tax strategy. Now, other than cost, it's also worth saying that when we talk about mortgage insurance, we have to think about what's going to happen with interest rates. And to give you more depth in this regard, if you were to have bought in a house back in 2021, let's just say, in hindsight, interest rates have gone up and you would have wanted to have just the standard monthly mortgage insurance. And the reason why is that you can cancel your mortgage insurance based upon the current value if you've lived in the property and made on-time payments for 2 years, or I should say had that mortgage and made on-time payments for 2 years, and if you have 25% equity in your house. Whereas if somebody would have taken the lender-paid mortgage insurance or the LPMI route, they would have a little bit higher of an interest rate than otherwise because they weren't making the monthly mortgage insurance premium. But now they're in a market where they're not going to refinance that mortgage because the rate's still so good, but they would have wished that they had the slightly lower rate and they were able to cancel the mortgage insurance. So it's important to populate or to think about what you expect the market to do. In a market like we are in presently, where rates are a little bit higher and we think they're going to trend lower, LPMI is a great tool that can help some people. If you have any questions or want to evaluate mortgage insurance options, 949-238-6035.